we gotta do? Mm-mm. Put this.
Dow Jones Industrial Average marks the biggest one-day percentage loss since June of 2020.
Whoa, 2020. Let me flip that.
Amazon shares closed 9% lower for the biggest drop since April of 2022.
What? Oh, no wonder. Hold on.
And MTC announcing a income stock offering in November. Michael, take it, Charlie.
That's not what I want. All right, I'm just getting a couple of things, and then we'll get started pretty quickly. I'm probably have to jet early, and just heads up, not to be rude, but I might. The phone rings. I might have to take a quick phone call. I gotta pick up my dog from the vet too.
The Argentina is been selected to participate in DARPA's quantum benchmarking initiative for bringing home single idea.
All right. Let me just pull that up.
It's confirming a prior report for Rigetti.
Is that Rigetti? Okay, let me just put this here. How's everybody doing? 1 second before I forget. There's one more thing I wanted. Okay.
Argentina press saying that President Milei is seeking 0% tariffs on 50 Argentina imports into the U.S.
We'll give it 2 minutes. Usually I start 4:15, but I guess we'll start early. Having fun. Actually, I mean, I'm not having any fun. Because I'm not playing the downside at all. I've been in cash for quite a bit now, so I'm kind of leaning to board, to be quite honest. But I'm sure bears are having fun, and I'm sure bulls are not. And I can promise you, we'll be talking about the opposite sooner than later, at some point. Have I seen any flow on EZPW? I think I know that name. Is that the pawn shop play, or it used to be? I don't know if it's a different symbol now. Let me see. EZP. What was it again? PW. Easy Corp. Is this the pawn shop? Used to be at a pawn shop, I think. I don't know if it still is. But it's usually a defensive play when some volatility shows up, recession fears, growth scare, usually catches a nice bid, and I see it has been catching a nice bid here, and pays a chunky dividend if I'm not mistaken. But again, I don't know if it's the same name anymore. Let's see, Engagement Provision Services. Oh yeah, it is Pawn London. Look at that. Yeah, I know this name. I haven't seen any action in it in options at all yet. I haven't seen in a while, actually. But I remember the name from prior corrections. But yeah, it might be a sweet spot for something like this. If you get rates lower and you get the Fed talking about more rate cuts, and you kind of get growth scare, slowdown, it's ripe for it. And what's the dividend? If I remember, it used to be a nice dividend. Let me see. Does it say here? Doesn't say here. I thought it says it usually. Oh, maybe I have to click on this here. Whoop. Here we go. Dividend yield, no dividend? It's got to pay a dividend. I don't know. Look at that. We haven't seen red like this in quite a while, huh? All right, let's get cracking. Let me lower this and start 5 minutes early, but just in case I gotta leave. All right, we'll keep it short and sweet. Just again, going back to where we kind of left off last week, just to get everybody caught up. Unfortunately, as I think no matter what, right? Even if you're in cash, even more so, you get antsy here. If you've been patient, oh man, I knew it. I got to take this call. Okay, 1 minute, I promise. I knew they were going to ring right as soon as I started. Hold on 1 second. Hello. $5:30. Perfect. Thank you so much. Bye-bye. Okay. Sorry about that. That actually worked out well. Instead of right back here, smack in the middle. Okay. All right. So where we left off last, we were kind of at a point, and if I'm not mistaken, we actually were just coming off these lows, where there was a higher probability we'd see some relief, right? We see some sort of relief rally, relief stage. Probably wouldn't be the cleanest of squeezes, not to what we're used to seeing in prior pullbacks. But based off a lot of the short-term sentiment, internals, breadth, all that stuff, we reached a point here where they got really aggressive taking down risk to where you usually, more than not, you get some sort of relief, right? And we kind of got that. even though it doesn't look like a whole much. We got a little bit of relief, but then you obviously had a catalyst event like yesterday, and yeah, again, you'll have people who claim that they called it right and knew Trump was going to get frisky, but really it's a crapshoot, right? Could have gone either way, and if he wasn't as aggressive tariff wise, you probably got an extension to what we were seeing. I didn't. By no means, I don't think no matter what transpired yesterday, in my opinion, I don't think we were done with what we're dealing with here. That if it went well, I think it would have prolonged the agony of sitting through what we're sitting through. We just more than likely would have had more tactical trading opportunities on the long side than we do now because of the price action. Okay, I think what has happened though, what has changed since we last spoke last week, and some Steam Room members you're already aware of this. Some of the big picture signals that we pay attention to, right? We like to pay attention to them in all types of markets because sometimes you can pick up on small divergences to get a gauge on the health of a rally or a little pullback in a bull trend. But a lot of those big picture signals that we pay attention to, especially on the credit side, they're for corrections, right? They kind of tip you off to where a normal pullback may have some teeth to it when they start to flash warning signals. And what we had initially throughout this early stage of a pullback, even with the market kind of bouncing around the highs, if you guys remember, we were seeing more of just divergence, right? In credit default swaps, credit spreads. Even though the market continued to make new highs or almost resemble, bullish price action, the credit market signals were singing a little different tune because they weren't really in risk on mode, right? They weren't flashing any warning signal by no means, but they weren't signaling risk on. And that's kind of what alerted us to be careful even before the pull, right? You always want to take note of it. But even with the pullback we have seen, if you guys remember, a lot of these credit market signals weren't really concerned about much. In other words, you weren't seeing spreads and swaps widen out in an aggressive way. That was kind of just mirroring the price action in a sense. What happened late last week, I think it might have been on Thursday, I refer to it as flinched. You had spreads and swaps kind of flinch late last week and look a little different. And let me show you, you could see here. Okay, so these are swaps inverted, right? And you can see, even with, right, you have this leg down, you can see the correlation, right? That's why I invert this thing, so you can see the correlation. You had a leg down and swaps on this inverted indicator, you had a leg down, okay? But you can see how this quickly rolled over in a pretty aggressive way, right? Long before the equity market rolled over, okay? That's why we look at these things, right? This is where you find value in this information, right? More than not, you'll see the correlation, and it's not really going to signal anything of noteworthy activity, right? But times like this, when you get into legit corrections, this is where you could get tipped off to possibly something bigger in the works, right? And that's kind of what we're seeing here now. Again, you have a lot of room here. You can see in 2022, people really don't get nervous till you get into the 500s on these things, and that's in this range here, down here. All right. But we'll see where we ended up today. I don't know where we ended up at the end of the day today. This was coming into today. But, we can very easily get to that level rather quickly when this starts to happen. And that's good and bad, right? The good is, in all likelihood, we were going to see this. It was just a matter of when, right? And that's the difficult part of trying to navigate through a correction. Okay, even with a pullback, you don't want to get too excited and too over bullish being in cash, because you could still be early, especially if you get tipped off from some of these signals that there's more pain to come. Okay, and that's kind of what we're dealing with now. So we don't know how aggressive this move becomes, but what I can tell you is, and you've heard me say this many times, if these things are going to get to that 500 range, okay, or wherever they end up, if they end up wider than they are now, the equity market is not going higher. Plain and simple. So obviously that's not something you want to get long into, right, or ahead of. And the other problem is you don't want to get in the middle of this widening in credit spreads and swaps, because you don't know how bad it can get, right? Because a lot of times they're pricing in more risk in the credit markets, and something can break, right? Something in the credit markets can break, and who knows what that reaction may look like in equities. So I know we spoke about this last week, and I kind of was pounding that point home, and I think it's even, just as important this week, is if you are in an elevated cash position and you've been patient to this point, the prudent thing to do is to remain patient here, and wait for the evidence, from whether we see it in some of these signals, we see it in the flow, or any of the things we pick up in, that we are closer to the end of this than not, right? And that doesn't mean downside, right? I have no idea if we're going lower. Like I told you last time, the worst of the sell-off could be done for all I know, okay? But who the hell wants to get long, right? What kind of risk reward are you getting involved in when there's no reward and there's all risk? And that's kind of what we've been facing these last couple of weeks, right? You have a lot of people out there, more than I like to see, that are buying things just because they're down, according to them, a lot over the last few weeks. And from my experience, that's not a good enough reason to buy into a correction, right? So that's kind of what we're dealing with here now. Eventually, right, especially at the pace we're seeing of late today, this type of selling continues, you're going to get to a place where everything we look at on the positioning side of things is done, right? Meaning you got systematic funds max short, they're done. You got hedge funds short out the eyeballs, they'd be done. You got retail, they spit the bucket, they're done. So you get to a point rather quickly when you start this process of, we can reach the point where the bulk of the selling may be done, even though the upside may not look as appetizing. And that's where we can start to nibble, in a sense, at the least, in some longer term stuff. But we got to get to that point. And if you remember, again, even before the correction, right, even if we had an up market, I mentioned to you guys that I was at the point anyway that I'm not looking to get aggressive building positions unless we get a complete washout, like I just described to you guys, or sweepers step in and start bombing new names and new things, right? And I think in all likelihood, there's a higher probability of us reaching a point where positioning gets washed out completely than sweepers coming in and buying new things. I can be wrong, and we'll see, but I think we're close enough where we can start to look towards that right now. And that's kind of how I'm approaching things, right? Everything I'm doing for the most part is intraday. I played one name, a healthcare related defensive name, September calls I bought a little of. But other than that, I've been just trying to scalp intraday, and with all due honesty, that hasn't been anything to talk about. And I know a lot of people have been finding success trading intraday with all this volatility. But for me, keying off sweeper activity, because that's what I do, hasn't been great at all. It's been a real pain in the ass. It hasn't been worth it, to be quite honest. Okay, but that's what I'm doing until we reach a point where some of these signals are telling me, at least now it's around the time where I can feel comfortable to start nibbling at things, even if sweepers aren't coming in a rather aggressive manner. Right? If sweepers come in aggressively, case closed. Right? That solves all my problems. But if the first scenario plays out first, which is positioning gets washed out, kind of like 2022, guys. 2022, that bear market, you had positioning kind of get washed out into the summer lows, right? So here, and the market had a rally off those summer lows. Where is it? Here, right? Yeah, this is it. Okay, and then came back and actually made a slight new low in October. Okay, but sellers couldn't take it any further. And even though the upside wasn't anything to get excited over, because you were battling a hawkish Fed. Sweepers were really defensive. If I remember, they were buying big pharma names. They were buying energy names. They weren't buying the risk on type of new leaders you would like to see. And then that all came in 2023. But, if you were looking to put away some names longer term, you had a situation here where you could take advantage of weakness and start to nibble at some things even before sweepers arrive. Okay? So that's kind of where, where we want to get to here. There's no particular level. I'm sorry. I know I get to ask that constantly. I have no idea. And again, I say that and then people throw their levels at me. I mean, I don't mean to be rude, but your level doesn't mean shit to me. There's a reason I don't have levels. Positioning is going to get washed out when positioning gets washed out. There's not a specific level. We could chop around here for 2 months and positioning could get washed out. We don't need any climactic selling from this point, right? It could just be frustrating price action where we get to that stage. So there's no level or anything like that. I think it's just a matter of being patient and waiting for these things to set up. And not, again, the biggest worry, especially newer traders, and if you've been, if you unfortunately haven't been in the cash position for a correction, you get that FOMO, right? Like a lot of people, especially these newer guys, they're used to the FOMO chasing rallies in a market that just went up. But now if you're in cash, you get the FOMO where you feel like you have to put some money to work to take advantage of this downturn. But the truth of the matter, and I can't stress it enough, you don't need to nail the lows to make a shitload of money if you're in cash waiting for the turn. Right? And I think 2022, and that's recent, was the perfect example of that. Because from the bottom in September, October 2022, for the rest of the year, okay, from September to January of 2023, it wasn't easy, right? I think you had the banks, which were taking a leadership role for those couple of months, energy, stuff like that. So it wasn't really the type of names we like to get excited about. And then in 2023, that was the setup, especially for most of you, where you had semiconductors, the most shorted group on the street going into the new year, and that sort of thing, right? So it goes to show you that's 3-4 months after the bottom to where things got really hot on the upside. All right. So that's where we're at. Let's look at a couple of things here quickly. I'll breeze through some of these things. So this is some of these big picture credit signals we talked about, right? Here's spreads. Okay. Sharpies. This is also a change from when we last spoke. If you remember, Sharpies were hedged pretty aggressively into this downturn, as you can see here, right? And last week they covered a huge chunk of that short exposure. Okay. They're not net long yet, as you can see, and they're not aggressively net long yet, obviously, but this may be the start of that process, right? This process has to start, and it usually starts into the weakness. Okay. Not always, but a lot of times it starts into the weakness and can take multiple weeks. On tomorrow we get another update, so we'll see there. Unfortunately, with tomorrow's update, we don't get the post-Trump tariff stuff, right? Because it's Wednesday, and it would be Wednesday after the close, Thursday's price action, where kind of the fireworks went off here. So we might have to wait an extra week to get a clean read from Sharpies. And see how they reacted to the tariff news, because it's a big deal, right? It's a big deal. Maybe they slapped hedges back on. Who knows? Okay, so we'll wait and see there. This is what some of the stuff that may be left, right? Like, for example, if we don't see buying start to show up in things, and that would be the best case scenario. Right, would be that we're still in a correction, right? Whether the lows are in or not, we're still in that corrective phase. Okay, a new bull trend really hasn't lifted off yet. Okay, again, example, September 2022 to the start of 2023. But we're seeing bull flow, right? We're seeing aggressive buying come into select names over that period, because then we can build positions in whatever names we like catching that action in that time, right? But what we may still have ahead of us, right, if sweepers don't get aggressive, is some of this stuff. Okay, this was coming, and this is no fluke. It happens a lot coming into 2025. Okay, this is from Jonathan Farrell on Bloomberg. Look at analyst price targets coming into the year. Nobody, not a soul, was calling for a down year. Okay? Now, just to give you an example, at the start of 2023, it was the complete opposite. Okay, not a soul was looking for an up year going into 2023. And the bear market was over, right? So this is still to come, where you're likely going to see these analysts take down their targets, right? It always happens. You're going to see analysts likely take down earnings estimates, okay, and that sort of thing. May not be as dramatic as some bears think it may be, right? But you're likely still going to need to see some of that, right? That's the next phase here. And maybe, you can make the argument that some of that may be priced in, and it could be, all right? But it's still going to add volatility to the mix, right? We're going to get really good evidence off that selling, right? Because if they attempt to sell them and they buy it, that's going to be a really bullish sign, right? But you're still going to have volatility off all of that. Downgrades and that sort of thing, right? You're going to be walking into downgrades in a name you're in every morning. Real pain in the ass, okay? So that may be the next stage here, where you start to see some of the economic data start to slip, some of the analyst estimates being taken down, that sort of thing. Okay, how dramatic? Who knows? We were talking about this a little in the steam room today, late afternoon. What is not a pretty picture. Now, it doesn't mean there's a lot more pain to come, but we kind of were talking about this, if you remember, a couple months ago now. Have you looked at the semis? Like, these things have looked pretty bad for a long time now, right? Like, the semis are usually the leader of a bull market. And these things have been in straight chop where the market was still bullish, and then completely have rolled over even without participating in a big piece of the rally. All right, because they were just overcrowded off this ramp. Okay, I mean, these things have rolled over here now, and that's likely. The price action is likely has been telling us that there's something not great going on there, right? Whether it's the whole AI thing being overhyped or whatever it may be, we're probably going to hear the reasons why the semis have been acting like this. Okay, or we're going to hear more reasons why the semis have been acting like this. Another group are the home builders. The home builders are actually, they look worse than they looked in 2022, and that's with the Fed rigging the game, battling inflation, and applying the most aggressive hiking cycle of rates we've ever seen. All right? So that was the worst case scenario in 2022 for home builders, you would think. All right? But they were the ones that started to outperform, right? They bottomed in the summer, and that kind of set off a huge rally. Well, people were calling for a recession and the housing market to crash. The home builders were the leader off the lows in the summer in 2022. They are completely rolling over here. All right? Like completely. So that, to me, that can't be good. I think the glass half full is that a lot of the pain we're already in the process of a lot of that pain. Okay? It doesn't necessarily mean there's a lot more pain to come. What my takeaway is there may be a lot more negative news to come. Okay, but that doesn't mean the price action has to go a lot lower. Right? Because that's what they could have been pricing in this whole time. Okay? But you can see how like people ignore. You had the semis and the home builders look like shit while everybody was all bulled up the latter stage of that rally, right? With everything's going to go great with Trump and this and that. And meanwhile, two major sectors were flashing, warning signals in a sense. All right, so I find that really interesting. And I think, again, more than likely, these things are going to need to bottom for this correction to come to an end. Like, it's hard to envision the home builders and the semis continuing to roll over and this correction being done with. Coming out of a correction, those are the two sectors you always want to look to first, in my opinion. And here's the kicker, right? And we talked about this, right? We looked at, how many times have we looked at late 2018, right? Just, again, a lot of similarities. I know different time. I'm not saying we're in 2018, right? But a lot of similarities, okay? And a lot of times when you get those type of corrections, these growth scares, okay, it always ends or concludes with some sort of Fed pivot. Now, I get it. People think tariffs are inflationary. I know some people who think the opposite, but whatever, even if you think it's inflationary, okay? And even if you don't think the Fed can cut rates and they have to be patient, we just witnessed, and that was 2023, with this whole non-QE, QE shit the Fed pulled, right? If you remember when the UK bond market froze up and all those shenanigans. So more than likely, when this is all said and done, you're likely going to get the Fed back on your side again. And that's something you want to keep your eyeballs peeled for, right? And again, when you're holding bags, right? When you're holding stocks that go tubing to the downside every day, it's not easy to see these things, or more importantly, acknowledge them, right? Because you feel awful, you feel bearish, or even when you're playing the downside, right? When you got that bearish bias, you don't want to believe any of that shit because you're having so much success on the downside. But if you're in a cash position with a clear head, you have a better shot of picking up on some of these things. All right. So that's kind of what I'm looking at here. Again, you guys may not want to hear it. I get it. Take the information with a grain of salt if you like. Let it go in one ear and out the other. I'm telling you from my experience, and that's 30 years in the game for me, right? Based off what I've learned, mistakes, and what I've applied and all that whole shit, okay? It's not worth, okay, if this is the case, it's not worth getting nicked up, right? To try to make some money in this shit. And it cost you the pot of gold at the end of the rainbow. You understand? And I said it last week, right? Same thing. If you were fortunate enough to be in a cash position coming into this correction, you don't want to ruin it, okay, by trying to trade these crazy, violent overnight swings with option premium gassed up through the roof on both sides, right? No, hardly any edge from sweeper activity, especially call side. So that's the best advice I can give to anybody who is fortunate enough to be in cash. All right? Wait for that better backdrop, wait for that better climate, and that's where you're going to pick up the bulk of the money and hang on to it anyway. All right? And if you've been bearish and you're making money, good for you. Okay? I give you credit, but the only warning I can give you, and I promise you it's a legit warning, is don't fall in love with that bearish bias, because you're going to get a taste of the money, the downside money. It's going to taste good. You're going to be excited when a lot of other people are crying the blues. And once you get a taste of that money, it's not that easy to walk away from, right? And then you find yourself shorting the early stages of a new bull trend. And not only you give back the money you made shorting, you're missing out on a whole new bull trend. All right? Some people, very few, can do it, can switch their bias dramatically like that after making money, decent money on one side, flipping to the other side. All right? Not many can. You got to look yourself in the mirror and be honest with yourself. All right. So, those of you who are swing traders and mostly long only players, you just still need to be patient here. All right. You still need to be patient here. We're getting closer to the point where you could possibly nibble on some longer term stuff. But again, you want to see more evidence. You want to see more evidence. Like right now, I don't see any evidence. Right? I don't see any evidence or any reason for us to try to get long here. And prices, the S&P 500 being down 10% off the highs is not a legitimate reason, in my opinion. One more thing, right? We were talking about retail, if you remember. That was kind of the last hurrah. Here's what retail in March. Okay, let me put it this way. The problem into the highs before the market rolled over was the call buying from retail, right? After you had these quantum names go bananas, you had zero revenue nuclear names go bananas, you had call buying at a retail out of control again, right? You knew they would get caught and they would blow up. They pretty much got blown up on the option end, right? All those calls, poof, those stocks are down 50% off the highs, minimum, okay? But, and this is how much money is out there, even though they got lumped up on the call side, what they continued to do was buy equity in ETFs. They actually switched from options to dip buying equity in ETFs, right? And that's kind of what you're seeing here. All right, so last month, you had net imbalance out of retail for the month broke a record. All right? Now, when you see that from retail, they can look right and smart over the short term, but almost always the market gods get them. Almost always. Right? And right now they're getting them. Right now they're getting them. And they may need to swallow some more pain. Whatever it is, it is. Okay? So that was kind of the one real concern that was left, if you remember we were talking about. And that process is closer to done now. So that's a good thing. Here's retail traders year-to-date performance. You can see, kind of underperforming the S&P 500 this year now, right? You can see here start to slide away. All right. Our buddy hedge funds, you know where this is going to be when this is all said and done, right? This is going to be down here in this neck of the woods. Okay? More than likely, they're going to be pressing shorts. Whether it comes off a bounce initially or whatever it is, they're more than likely going to be pressing shorts in individual names. Right now, net, they're flat. They're living up to their name, hedge funds, right? They're long some shit and they're short some shit. And that's another thing that's going on that kind of caps the upside. You got a lot of pair trading going on, right? So getting long defensive names and shorting high flyers, right? The problem with that is, even if you just get long the defensive name, those names don't have to go up for them to make money, right? They could both go lower as long as the defensive name holds up better than the other. So you got a lot of that going on now that's adding to the mess, right? We want to see this take a nice dive, and obviously you guys have seen this before. It can happen rather quickly, right? 1 week, boop. Okay. I think that's it, guys. I think that's it. All right. I wanted to breeze through some of the more important things. Short-term sentiment. Again, I solely use it for intraday purposes during corrections. Because they're no way as good in a correction as obviously in an uptrend. All right. Short-term sentiments for uptrends. Every dip along the way in an uptrend, these short-term signals are going to nail the lows. It's that last signal that ultimately fails, and that signal is probably one of the strongest signals in itself because that tells you that you're likely going into a correction. That's why it failed. All right. So what we're seeing out of this is we're seeing this get into bull territory, and you're not seeing more. You're not seeing much of a reaction beyond a day. Okay. So this in particular, this is one of our go-to short-term sentiment signals. Under 10 is kind of a snapback signal, looking for a squeeze. You can see we got a few times over here underneath it, and you kind of had bounces off that. Going into today, we were up here. We'll likely, I'm sure, be under 10 going into tomorrow. All right. But again, short-term signals. So I take it with a grain of salt. The other good thing is to put the call. All right. So let's look at a put the call very quickly. I like all this stuff. Like all this stuff was useless a month ago. Here's any put the call. These are from TradingView, but you get a general idea. Okay, and this is where we close today. I'll get the exact numbers when I get off of here. So, you get another day follow through tomorrow, a morning like we had today, and you may get kind of a little bit of a panic that puts in a squeeze low. Okay. Does anybody have any questions? Hi, Senga. Anybody have any questions before I wrap it up here? Because I kind of got to get going. Why isn't TLT higher? That's a good question. Again, I don't know if it's a Fed thing. I don't know if it's a global thing that foreigners won't buy bonds. I really don't know. I'm not a bond guy. So, TLT will likely, it should outperform, you would think. But I really, I don't have a true and honest answer for you. I've heard excuses, one of them being foreigners aren't going to buy as much of our treasuries and shit like that. Who knows? Who knows? But, I mean, listen, it's always easier to see in hindsight. But if you rewind, right? And this is not, again, if you're caught here, pour vinegar on your wounds, okay? This is just so you learn from this going forward, right? There were more than enough signs prior to this downturn where we should all take our risk down pretty dramatically, okay? On top of that, just a little common sense where you had a nut job like Trump come in and all of a sudden everything was beautiful. Trump's going to do this. Trump is going to do that. The market's never going to go down. People forget all the good was getting priced in or Trump. People forgot all the negative stuff in regards to the market. Like they didn't have Trump as president before. It's amazing. And I mean, he actually told you what he's going to do. None of this is a surprise. He literally, everybody should know his playbook, right? He's slowing shit down. He's slapping tariffs all over the place, right? He's doing everything for a reason. Now, he may get too cute and maybe ends up biting him in the ass, right? As far as working out the way he thinks it will. But everything he's doing, he kind of told you he would do. He kind of told you he would do. If we can avoid a nasty recession out of this, I think ultimately it's going to be an unbelievable buying opportunity. Not only that, I told you guys, you may think I'm nuts, but I think you have a shot at seeing a real, true bull market come out of this, right? You've heard me say it. As crazy as it sounds, because you had some big, crazy winners out of the bull run. But the characteristics that you normally would look for in a bull market, they weren't really there out of this last bull run. They weren't really there. The majority of the time, it was a defensive, quality, mega cap bull market. Right? They weren't buying because they're bullish on the economy. Right? They were buying because of the opposite of that, because they weren't bullish on the economy. So they were crowding into these mega cap, big tech names because they had these steady growth, steady numbers. Right? Then you had AI show up. And that kind of took things to a different level. And that's where you started to get a glimpse, right, of what a bull market usually looks like. But the problem was it was so concentrated, right, where it created, whether you want to admit it or not, at the least a mini bubble out of it. And now we're paying the price for it. Right? And you guys know, you guys have been on these webinars. How many people have been arguing with me with, Microsoft, NVIDIA's numbers, where NVIDIA growing like this, it's impossible for that stock not to get higher. It'd be trading at 8 times earnings. Well, guess what? The PE multiple has been in crash mode. NVIDIA hasn't missed a quarter. Right? All the semis that people were tripping over themselves to buy, no way would they go down longer than a month or two. Look at them all now. Right? The zero nuclear power names, all that shit. Doesn't matter. when things get oversaturated and overcrowded, it always ends up being a problem. Always. You know? So, and I think that's an important note to end this on. That's what I think is the most interesting, is going to be the most interesting development coming out of this. What does the other side look like? Like everybody just assumes, right? And that's why they're buying these same names, retail, but everyone just assumes it's going to be the same shit. It was just a pullback and everything is going to go back to the way it was. But a lot of times when you get these corrections, you get a different look on the other side. All right? Different names, different leaders. Not all the time. But, you know, that's the risk with starting to buy too early in a correction. Names that are up so much, and just because they come down over the past few weeks, you know, starting to buy these names, whether they're longer term or not. These names can go into hibernation. I mean, look at a name like Microsoft. Look at this thing has been completely dead money. You talk about the king of AI. Okay, you would have sat in even as the market went higher. You would have ended up losing money. And then now with the market lower, you ended up, you know, losing more money. You know, so it doesn't matter. It doesn't matter what these names are. But to me, that's the most interesting thing, especially if it becomes more of a risk-on, right, type of bull market, true bull market type of thing. You know what it looks like on the other side, what names are involved, right, and stuff like that. Either the IPO market was dry, you had very little new names coming, right? We complained about new names for months. So it's been all smoke and mirrors. Yeah, I agree, Tyler. I agree. I think you kind of hit the nail on the head. I think there was just so much money out there because of the Fed. And, you know, that money needed a place to go, and it went into, you know, mega caps and bought this whole AI story. I agree. I think that, you know, for me anyway, that was the biggest problem the last couple of years, is that because that whole bull market lacked those characteristics I usually look for. That bull market didn't treat me as well as other bull markets have in the past. You know, it was strictly a mega cap. Listen, if especially options got big, if you didn't have retail call buying like it was, none of these names get bid up the way they did. You know, they were buying $1,000 stocks. You know, just because there was nothing else to buy. So I kind of agree with you. It was, you know, a lot of smoke and mirrors. Maybe not the whole thing, but a lot of it was smoke and mirrors. Thoughts on Tesla? Honestly, I don't have any thoughts. I really don't. I don't have any thoughts. You know, again, what am I going to tell you that you, your friends, your family, and all of social media is not talking about? Right? You got perma bears in Musk, that perma bears in Tesla that think this thing can go to zero, right? And you got bulls that like the name because it's just down so much over the past couple of months. You know, I mean, for me, I just don't see much of any edge here at all. You know, but you guys know me. When there's that much buzz in a name, I run the other way. I don't walk. I run the other way. I want nothing to do with it because there's no edge for me, right? Like, this is a stock I can very easily envision ends up frustrating both bulls and bears. And that would be the pain trade. You know? So I think again, the way I look at it, to be bullish of Tesla again, you need a period like this. And it's more time than anything else, right? So you kind of had this crazy move, all that excitement, and then it took all of this for all that excitement to kind of fade, right? By this over here, Tesla was on everybody's do not trade list. Everybody, right? At this point here, nobody wanted to even look at Tesla, the biggest of bulls. So you can say, all right, if I see some action in it that piques my interest, I'll take a shot. Here, I think you're just, there's not enough time that has gone by. My honest opinion. Everybody's trying to figure out Tesla. Everybody. I walk into 7-Eleven, the guy behind the counter is asking me about Tesla. Honestly, I couldn't care less. I don't have to trade Tesla. What do I care? But that's stuff I steer clear of. 2-3 months. Yeah, a good 2-3 months of nothing. Exactly. So, at the least 2-3 months of nothing. All right, the flow dies. Kind of the period we went through here, you remember. Like I said, at this point here, literally you could go on Twitter and you could see people writing those words. Tesla's on my do not trade list because it frustrated the living piss out of them. Right? And down here, you could see here for what? February, March, April, May, June. For a good 5 months, bulls and bears get frustrated. Both of them. And that you may need to see. Doesn't mean that is going to happen here, but I'm just saying that for me to even be remotely have an opinion on Tesla again, that would need to happen for me to share an opinion. Otherwise, I'm being honest with you. I'm not going to tell you anything you don't know already. You know what I mean? There's nothing I can share with you that you're not aware of already. Nothing. Okay? The flow, there's call and put buyers, both in size, every day. There's just no edge. And if you remember the other stock that was like that for a good period of time? A lot longer than Tesla? Right? Many of you guys came on here each and every Thursday asking me about NVIDIA, and I said the same exact thing. I don't know. I have no clue. There's no edge. Zero. Right? Does it go higher? Does it go lower? I don't know. I couldn't care. All I know is everybody's trying to figure it out. Everybody. Right? Everybody's trying to figure it out. You had NVIDIA guys concocting a pyramid scheme, that it's a pyramid scheme on social media. It's going to zero, right? The bears. And then you had the perma bulls that, NVIDIA is going to infinity because of earnings. Like nobody else knows about the earnings in NVIDIA. The truth of the matter is, everybody who was bullish NVIDIA already owned NVIDIA. You understand? They were already long NVIDIA. Every fund, every investor, whoever liked NVIDIA was already in it at this point. So that was a good example of that, Any other questions before we wrap it up? Is Sang still bearish Bitcoin? I think he's trying to catch a short in Bitcoin. Luci's trying to catch a short in Bitcoin. I think he is short in Bitcoin still, yeah. Because he's been short equities, and you gotta think that Bitcoin will crack here before it's said and done. How much of a crack? Who the hell knows? And you know what? Gold probably cracks too. When there's forced selling, everything gets sold, my friends. Understand that. Okay? When margin calls and liquidation shows their face, there's nothing that doesn't get sold. Everything gets sold. No matter what the numbers look like, no matter what the charts look like, no matter what level looks like it's going to hold, that all goes out the window. All right? And I think that's a perfect segue to the other thing that spooked me the most out of everything. Okay? And that's correlation, right? You remember we were talking about that? To me, that's what I was most concerned about. Okay? You had all these correlation indicators at new lows, right? And almost always, it doesn't even matter that a correction shows up, but when you're at a major low like that, languishing at a major low, one that's telling you the breadth out there is not healthy, the participation out there is not healthy, you got dispersion all over the place, so it's more difficult to make money in that market, right? So there you go with the risk reward again. The reward is poor because it's harder to make money, find something to make money, okay? But the risk is if a correction shows up, you get correlation going from these low levels to now significantly higher levels. And what that means is that everything now is correlated to the indexes. Okay? So no matter what stock you like, when you get into these type of climates, if the market goes down, that stock is going down with it. No matter what, right? And you're going to hear this term being used, it's going to make you nauseous, but throwing the baby out with the bathwater, right? You guys remember that in every correction? That's what you're going to hear because everything gets sold, right? And that's where you see these correlation charts all at highs again. But when they top out and start to roll over, that's when you can throw a dart at a name on the long side and make higher and go higher. DJT, yeah, I don't F around with that thing. DJT. You know? Look at this thing. Yeah, I don't screw around with this thing. You know? Maybe they squeeze it or not, I have no idea. But yeah, this is a pump and dump stock. You know, you got to watch when you get into corrections, all these names that you guys like to trade and a lot of us made decent money with, right? Zero revenue, no earnings. They don't work. Okay? They do not work in a correction. Right? Again, coming out of 2022, even well after we made the hit bottom and made the lows and turned. Okay, if you remember what stocks were going higher, profitable names with solid growth. Right? Everybody cared about fundamentals again. And then lo and behold, fast forward to where we were last month, and that went completely out the window. Right? People are buying quantum names with no revenue. One extreme to the other. But when you get into corrections, this shit, you can get destroyed in this shit. You know? This is the stuff you could get destroyed in. No matter how sexy the story is. Okay? Because the story is just a story. Everybody's got a sexy story. All right? It's only when things get that over speculation, right? When things get bubbly, people care about a story. And that's usually when the Fed injects liquidity into the system. Without the Fed doing its thing, nobody wants to hear a story. How much money are you making? Right? You see IPOs dry up. You see all sorts of things like that. So I would be careful with any of these names with no fundamentals at all. All right. Yeah, CoreWeave, one of the few IPOs, was actually a nice trade. But again, that wouldn't surprise me. This thing falls on its face, you know? It wouldn't surprise me one bit. I don't even know what the hell it did today. Down $1? No, down $7. Yeah. This thing, I wouldn't be surprised it's back in the 30s, if not lower at some point. Yeah, we're in a different time now. We're in a different time. So, you know, and I don't want to be like standoffish. It's just, you don't want to rack your brain too much in this type of climate because it's wasted brain cells. You know what I mean? It's wasted brain cells. Okay? Because if you're getting to a market, the complete opposite of what we had, where correlation is extremely high, like I just said, it doesn't matter. You understand? Like CoreWeave could be the best thing since sliced bread. If you get into an elevated correlated environment, the market goes down, Corey was going to get killed. You know what I mean, Sahil? It doesn't matter. Again, just the opposite of what we saw right during the bull times, right? So you don't want to make yourself dizzy over stuff that is a waste of time right now. I think you build a watch list, right? You keep a close eye on the flow. You let the flow try to convince you of what they're buying. And you take a patient approach, nice and easy. And time flies, man. That's one thing we talk about all the time, right? Time goes by so quick. Before you know it, it's a month or two later, and this thing could be long gone in a completely different climate. But if you've been patient up to now, you want to remain patient and don't get involved in the debates. Like I said, the Tesla debate. Who cares? If a month from now, whatever it may be, the climate's different, and now you like Tesla because the climate's different, that's a different story. That's a different story. But trying to break down the fundamentals and all that, so it's a futile feat. It's a futile feat right now. All right, so let's see how they shake them out tomorrow. But like I said, the news, it looks like from what the signs we're seeing right now, it looks like the news is going to get worse. But let's see if the price action gets worse, right? There's probably going to still be volatility, but maybe some of those constructive signs we talked about, maybe they start to show up while the noise gets more bearish. You understand? And usually the bottoms, right, the lows show up at the most bearish point, right? Again, 2022, a recent example, those lows showed up when everybody was guaranteeing a recession. Everybody saw a recession coming. There was no shot of no recession coming, right? The noise was at its most bearish. Every analyst was calling for a down year in 2023. And so all those great lows always show up when the noise is loudest and most bearish, right? Even the low after that with SIVB. Remember the regional banking crisis? You probably don't even remember that. We had a regional banking crisis. SIVB went under. Ackman was calling for a bank run on Twitter. All right? What'd the market do? From that point on, it never looked back. That was actually, I think, the best entry, even better than the 2022 bottom. Because that's where shit got a real kick in the ass because the Fed pivoted, right? The Fed had to do something. Well, they're not going to bail out regional banks. Well, they did. So these are the things we got to keep an eye on. And the less you do, the easier it'll be to have a clear head and keep an eye out for these things. All right. And we'll come on here and talk about them. And obviously in the steam room, we talk about them every day. And I keep you guys updated every night. All right. Yeah, you're right. There's no history. There's no playbook tariffs like this, right? There's nothing really to base it on. But that's good. I think that's good because it allows us to pay more attention to the stuff that matters anyway, right? The flow, the price action, right? The signals we pay attention to. So you make a good point. There's no preemptive playbook or anything like that for what we're dealing with now. So I think it's even more the reason to kind of zone in on the more important stuff. On the other hand, ton of retail 401k money out here will always keep things bubbling. Yeah, and Tyler, listen, if the Fed somehow maneuvers here, right, and they keep this going, you get these bubbles, they only get bigger. But we're not going to find them, Tyler, right? Whether you agree with it or not, you get another QE, not QE out of the Fed, and you better get long some shit. So, but you're 100% right. All right, everybody, thanks for stopping by. I'll see you guys next week on Thursday, and you Steam Room guys, I'll see you mañana. Later, everybody.